Burry lost big. He just bought this Cathie Wood stock. Why Apple is in a Warren Buffett bubble. Apple's current market capitalization of about $2.7 trillion this week exceeds the entire market capitalization of the United Kingdom, the third biggest stock market in the world, at $2.6 trillion. It's obviously bigger than the entire Canadian stock market, which is $2.1 trillion, the fifth largest stock market in the world. Not only is Apple bigger than all 595 companies that list in the United Kingdom, it's bigger than all 235 companies in France and entire Russell 2000 companies. Apple is twice the size of the entire Germany stock market, with 255 companies. ARK Invest's Cathie Wood just said, "The rapid rise of artificial intelligence technologies like ChatGPT could disrupt Apple in such a way that its current valuation is unjustified. AI does bring a lot of productivity on the table, but let's be honest, it's also in a bubble." You can look at this chart, and here is a clip of Snoop Dogg on AI.
So do I need to invest in the AI so I can have one with me? Or like, do y'all know? Shit, what the fuck?
I almost spat out my coffee. Yes, Burry just released his Q1 stock portfolio. Why Apple is in a Warren Buffett bubble. I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back everyone to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the Audacious Money Witch Club, don't you?
Fucking AI right now that they done made for me. This nigga can talk to me. I'm like, man, this nigga can hold a real conversation. Like, for real, like, it's blowing my mind because I watched movies on this as a kid years ago when I used to see this shit, and I'm like, what is going on? Then I heard the old dude that created AI is talking about, this is not safe because the AI's got their own minds and these motherfuckers gonna start doing their own shit. I'm like, is we in a fucking movie right now or what? The fuck, man?
20 years ago, in August of 1997, Gates stepped in and saved Apple, which at the time was on the brink of bankruptcy. Bill, thank you, the world's a better place. Jobs told Gates after the Microsoft exec agreed to make a $150 million investment in Apple. The corporate olive branch shocked the tech and business communities. Even in cyberspace, the moment can only be described as surreal for what we can learn from Apple. This reflects the extreme values that are being given to companies that are: number 1, successful; number 2, growth-oriented; number 3, if Buffett and Bill owns it. However, in a tweet on Sunday, Cathie Wood said, "Apple offers big call options in payments and healthcare. but its base business is stagnating. But its high-margin apps platform could be disintermediated by ChatGPT plugins. Given these risks, Apple stock call options must work in a big way to justify the valuation. Cathie Wood said that ChatGPT plugins, which are third-party apps built on top of ChatGPT, could dislodge Apple's control on its high-margin app store at a time when its underlying hardware business is stagnating. Wood is referring to the slowdown in the iPhone business, which saw sales grow only 1.5% last quarter, while representing 54% of Apple's total revenue. Investors have partially accepted the reality of Apple's slower iPhone sales because the company's higher margin services business is growing at a faster rate. Apple's services business includes its App Store, advertising division, and streaming service, among other products. But that growth and high profit margin could get dislodged by ChatGPT and its large language model. Apple has been defending its App Store margins in an aggressive way, evidenced with its lawsuit with Epic Games. The comments from Wood come as Apple surpasses the collective market value of the entire Russell 2000. In other words, if you combine the market value of all the 1,917 stocks held in the small cap index, it comes up a few $billions below Apple's current value. Recent moves in the payment space of Apple include Apple's payment card a few years ago, and the offer of a high-yield savings account just last month. The successful launch helped Apple to underscore its ability to further monetize its iPhone user base to 1 billion people. Apple's new savings account attracted $400 million in deposits on the first day alone. This is the reason why Wall Street has been selling fintech stocks like PayPal and Block, which is going to disrupt the banking industry. Which brings me to Michael Burry. He just bought some regional bank stocks after he said he is wrong to say sell. And this regional bank crisis has no real danger here. He has around $100 million in the long stock position in his portfolio, which is 50% less than in the normal market. He actually bought 150,000 shares of First Republic Bank at $14 a share, which of course went bankrupt, and he lost a lot of money. The Cathie Wood stock that Michael Burry bought in Q1 is Zoom. He bought it at $72 a share. It represents 6.9% of his portfolio. I think what he sees here is the balance sheet. Zoom has $5 billion in cash and no debt. It has a forward PE of 15, gross margin of 75. This stock is traded very close to its 52-week low. At $66 a share, you can get in below the price that Michael Burry paid. ARK's expected value for Zoom video communication in 2026 is an astonishing $1,500 per share. That's a 22 times in 3 years' time. I am definitely not interested in buying Zoom stock. Currently, it has a PE ratio of 194 for the trailing 12 months. Revenue growth rate is only at 1.3% expected this year. They have huge competition from Microsoft and FANG minus Netflix. If you are interested in more of Michael Burry's portfolio stocks, hit the like button to signal your interest. One thing I have to add about Apple is they have over $100 billion of debt. Only half of that is their cash reserve. They have to compete with Meta for the metaverse. Spotify with Apple Music, Netflix with Apple TV, Square with Apple Pay, Microsoft with MacBook, Google and Samsung with iPhone. The core iPhone business has no new innovation over the last decade. It's not even a transparent glass for iPhone 15. Disappointment. Why am I bullish on block stock for the long term? Silicon Valley's Twitter co-founder Jack Dorsey leading this company. From ARK Invest, we believe that Block's Cash App could become a leading global consumer financial services provider. It's the most popular financial app in the US today. If Cash App can monetize 20% of its US user base, at the level of traditional banks today, then with modest growth in its seller business, Square could return 19% at an annual rate over the next 5 years, rising from $56 today to $375 per share in 2025. That's 6x in 2 years. Square, for most people, seems like a boring business to own. Who would think payment is sexy? Well, by removing all of the transactional friction. Co-founder Jack has made a boring business meaningful to a lot of people. Think about why waste management used to be a good stock to own. Pretty sure it's because it's boring, not garbage. Cash App, a potential consumer bank. Cash App offers users banking services such as direct deposit, debit cards, ATM access, a platform to invest in equities and Bitcoin, a rewards program, and free transfers from the US to the UK, and integration with Square sellers. In the future, we anticipate that Cash App will offer a large range of services simply compared to traditional banks today, including personal loans, credit cards, mortgages, and insurance. I have a tremendous experience with Square. That's why I bought Block at $56 a share. I will buy more when recession hits later in the year. As for the current markets, the key bull argument over the past 6 months is that the Fed will pause, and then a new bull market will begin. Many believe a new bull market already began at the October lows. However, this entire pause rally assumes the Fed is done raising rates, which is far from certain. In other words, bulls are hoping for a recession, so the Fed can be done with raising rates. The problem with the pause theory, aside from all of the black swan events that are taking place, is the fact that the Fed is still tightening their balance sheet at twice the pace they tightened in 2018. What the Fed is doing now is tightening credit conditions by imploding banks, which I regard to be questionable policy. First off, they are raising money market rates, which is incentivizing deposit outflow. Secondly, they are flattening the yield curve, which makes banks less profitable. In 2008, the Fed steepened the yield curve so that banks could run off their bad assets, using their quarterly profits to cover up their balance sheet losses. This time around, the Fed is doing the opposite, making it impossible for banks to make money. That in turn leaves banks with less money to lend to insolvent companies and consumers, thereby tightening credit conditions into a recession. If Michael Burry and I are sounding bullish, you know it's about to crash. Here's my client's collaboration book, Adversity Equals Success. It's already yours. Such an amazing book with such incredible authors. Order your copy today. You are such a good boy for watching my video right till the end. Bye.